Okay, so now in this video, we're going to be going over market structure. So by now you should understand the market participants. These are the people that are operating within the market. You should understand why most people lose and why risk management is important. You should understand the importance of journaling and also how to journal effectively as well, right? And you should also by now understand how to mark out the key levels that we went over. We went over the Bitcoin chart, which doesn't have any weekly closes, so there's no gaps. But when there is gaps in the market, we can treat it as a gap, or we can treat it as a level. So for example, there is a level here, but because there's a gap in the next open, we can just put the whole level as a whole, right? The reason why I went over Bitcoin is because it's much easier for beginners to mark out the levels using Bitcoin, okay? So now the levels, just like anything else, just like market structure as well, they obviously apply to every asset. We use the same concept. And when we're reading market structure, the first thing we want to look at is the higher time frame market structure, because obviously, just like anything in trading, the higher time frame, it holds more merit, okay? The higher time frame is a lot more important than the lower time frame. And technically speaking, if the lower time frame is not aligned with the higher time frame, so if the lower time frame, let me get this brush. If the lower time frame is going down, we can see it in the structure, right? But the higher time frame is going up, you want to pay more attention to the higher time frame because that holds more merit, okay? So there are multiple things that we use market structure for. We use it once we're entering a trade to get a bit of confirmation that the shift is happening in our favor before we take a reversal trade, right? So for a reversal setup, it offers a little bit of confirmation, okay? So let's just run through an example. If I want to take a short on the 30-minute chart, before I take my short, I want to make sure that the market structure shifts on the 30 minutes, okay? So just looking quickly here, we can see that the higher time frame is clearly making higher highs because we have a high here, we have a low here, we have a low here, and we took this high twice. So we're clearly making higher highs, and we're also clearly making higher lows, okay? Because we can see this low, and even though this low got taken out, it only got taken out very slightly. We'll get into that later on. And this is a higher low, and as we can see, we continue to make higher lows, and now we might be putting in another higher low here, okay? So now, another thing I want to mention before we get into the details is market structure. There's external market structure, which is obviously the higher time frame, but then also there's internal market structure. As we can see on this leg up over here, that started on the 31st of March, we can see that we actually started making higher lows on the lower time frame as well. High, low, higher high, higher low, higher high. No, sorry, there's not a higher high yet. Higher low, and now over here we make a higher high, right? So now what we're doing is we're using this to understand the structure of the market, to understand the strength of the market, and to understand the overall trend in the market. So because we understand that the market is now doing, it's putting in higher lows every time. Anytime that a low comes in, we're not going to short it too quickly. We're going to assume it's going to be another higher low until proven otherwise. Okay, that's very important. So the way I just mentioned that we use it to get some confirmation is, let's just say I had a reason for wanting to go short on Bitcoin here, okay, in this region. Let's just say I had a reason to go short here. Because I now understand that the higher time frame market structure is bullish, and also the lower time frame market structure is bullish, okay, before I take a short, I want to see some sort of shift in structure. Now, because I'm taking a lower or medium time frame short, I might want to wait for just a little bit of a shift, right? So now we can see that this low right here is the latest higher low that's being put in, right? So before I can take a short setup, before I can assume the market's going much lower, I need to at least see some sign of weakness at this low, because this is the structural low that is being put in right now. So if price now here fails to push up higher over the next 2 days maybe, and we come back down and we lose this low, which is very important for the structure, and we retest it and we continue to hold below it, I can have a little bit more confirmation and more confidence in taking a short setup, okay? So as we mentioned, for reversal trades, it allows you to get a little bit of confirmation. Allows you to get a little bit of confirmation before taking your reversal trade. But overall, we use market structure to determine the overall trend of the market. It is the most important thing to look at when determining who's in charge, right? Is it the buyers or is it the sellers? Okay. And in order for us to determine who's in charge, we need to look at the structure of the market, because as we mentioned, this is just the auction market theory, right? This is just all of this right here. It's just a participation of buyers and sellers. So if I want to get an understanding of who's stronger on the overall horizontal time frame, right? If that makes sense, who's stronger, I just need to look at who's more aggressive, and the market structure will tell us who's more aggressive in a very, very quick manner, right? I can see very quickly that there is more buying than there is selling, and I can deduce that by looking at the structure of the market, okay? That's very important. The first thing that the market structure does is it allows us to understand what type of direction the trend is heading in. It allows us to understand who is in control. And once we're taking reversal setups, which we don't want to be doing too often, we'll get into that later on, we will be obviously giving us a little bit more confirmation that the structure might be shifting, okay? So now, I want to start by just looking at the line chart, okay? Let's just look at the line chart. Okay, this is all the way back from 2023, so this is like very old. Actually, let's just look at, this is the last time we went up in 2021. This is the last bull market, we call it. And as we can see, right, this is obviously 2020 bull market. As we can see, that we clearly put in a high, a higher low, a higher high, a higher low, a higher high, a higher low. And obviously internally, remember we said that the lower time frame can sometimes make a bearish structure. So internally here, we made a bearish structure, right? Because these lows here get taken, and this low is lower than this low, and this high is lower than this high, right? But because the higher time frame is still bullish, and we didn't actually take out this low right here to aggressively, we did take it out technically a tiny bit, but you actually want to see some time acceptance, and also some push down further than just a quick push down. We'll get into that later on, right? But what I'm saying is, yes, we can get a bearish structure, but because the higher time frame is overall still very bullish, you don't want to pay too much significance on the bearish local downtrend, because the higher time frame is still bullish, right? As we can see here. As we can see here on the higher time frame, this was the last low that we put in before we made a new high, which is this high over here. This was the last low we put in before we made a new high. So until this low is technically broken, the structure is still bullish, right? And even though it got tapped slightly, it's not really broken. It has to break through with confirmation in terms of time and price, not just price, but time, right? Time is very important because it signifies that the participants have agreed that below this price is a participants have agreed that below this price is a fair level to auction out, right? That is why time is important, because we're getting a lot of auction time down here. That's a lot more significant than us coming down and quickly pushing back up. That's actually a very bullish move, the way we quickly pushed back up. Yeah, so I just want to go over the higher time frame, and as we can see, we put in another higher low here, another higher low here, another higher low here, okay? And the reason why these are significant higher lows is because they're the last lows that we put in before a new high was formed, as we can see here. And before a new high was formed, as we can see here, this one didn't form a new high, so you can take it out, but it doesn't matter too much, right? If you use this one or this one. Okay, now I want you to look at this chart, right? And just tell me at what point does structure shift, right? Because as we can see here, we made a higher high. And then this low here, we made a higher low again. And then we made a higher high. So this low becomes very significant. And the point where structure shifts is once this low was broken. As we can see here, this low was broken. It was retested. And after it was retested, not only did we just break it slightly and go back up, we broke it and we came back down, and we spent a lot of time and a lot of volume below it. Okay, so this is significant. This is a significant break. Very, very, very different to this break, right? Because this break was only very short amount of time, and we quickly snapped up. Here we broke it, we retested it, and we quickly snapped back down. This is the first sign of weakness. And as we can see, oh my bad. As we can see, we straight away pushed up and we made another high. But as you can see, this high right here is now a lower high to this high. So as we can see on the higher time frame, this high is higher than this high. So this now becomes a lower high. Okay, this now becomes a lower high because it's lower than this high, and on top of that, this high happened after we broke structure. Okay, so what I'm trying to say is this is the first significant sign of weakness, but then once we put this low in, because it took out the previous low as well, this is very, very strong sign that the market is shifting. And obviously once we finish price here and we come back down and we break out to the downside, that's when we have full confirmation that the trend is changing. Okay, and this is going to be a little bit complicated for you to understand, but so now we're operating in a bearish market. As we can see, we're making lower high, lower high, lower high, lower high, lower high, lower high, and then obviously this high does take out these highs, but it's very, very insignificant. It's a quick take. We call this a deviation pattern or a swing failure pattern. We'll get into that later, but basically we want to see some time and some volume acceptance above the high in order for us to determine that it's an actual break of structure and not just a quick fake out. Okay, so as you can see here, we went down below it heavily and we spent time below it again, talking about this low. Whereas this high here, we barely tapped it, and also we didn't go above it for a long time. We didn't spend time above it or price above it. Okay, very important. So now let's continue. Okay, so we put in another lower low and then another lower low, and as we can see, this is the last higher low that we put in before we made it a relatively new low, right? So this was the last strong high that we put in, and every other high was lower than it. Okay, so we want to look at the chart now, and we want to see at what point did the market structure turn bullish again. Okay, so because this was the last high before we put in a lower low, this is a very important high, and as we can see here, we break it, and not only do we break it insignificantly, we break it with a lot of volume, and we spend a lot of time above it. Okay, that's very important to understand, because time is very important as well as volume. Okay, so now we're looking at a shift in structure here, and for me, once this happens, as long as we don't come back below this high, I think we're in a bullish market. And as we can see, after we break this high, what do we start to do? We make a higher low, a higher low. Once again, we take this low out, but we take it very, very shallow take, not an aggressive take, not much volume or time spent below it. And what this tells me is we're continuing the trend because we quickly rebought it, okay, and we got bought back up very aggressively. Okay, let's continue. I'm gonna keep this low. I'm not gonna mark it because it's very insignificant. As we can see here, we break another higher high on this break. Okay, and then we start higher low, and obviously I will consider this a higher low because once again we didn't actually break below it too aggressively. This happens very often in crypto. We'll get into that later on. And then obviously we have a high here, another higher high, another higher low, another higher high. And now this is where it gets a little bit tricky because this low is very internal to this overall trend. It's very internal. It's not a big low. As we can see, this is a much bigger low, much bigger low, much bigger low. This low wouldn't have as much significance as any of these lows because it's just a very small internal meaning lower time frame low. Okay. So we make another higher high here because this high is higher than this high, and once again we make another higher high, and over here we break up. Right, we'll make another higher high from this high, and as we can see over here, we'll make a higher low. It's very internal. I probably wouldn't pay too much attention to it. We'll make another higher high, and as we can see here, this is the last higher low before we break up. So this becomes a very important higher low, and as we can see here, as soon as we lost that higher low with aggression, we now started a new downtrend. Okay. And then as we can see, we put in a lower low, which is lower than these lows, which is very significant. We come back up, and then what do we put in? We put in a lower high. The reason why this is a lower high because it's lower than this high, right? And we break the low again, and now we have a lower high here because it's lower than this high. So now we're watching if price is going to come back down and put in a lower low below this low. But as we can see here, we put in a higher high and we failed to break below it. That's the first sign that the market structure might shift. And then I would not take this as a market structure shift because this is very internal. We want to look at the strong highs and lows, the ones that have more significance. Okay, so as we can see here, once we break up above this high, the market structure shifted bullish again, and we start going in an uptrend, right? Okay. Now we're back in an uptrend. We're making higher lows, and higher highs. I won't mark every one of them out. As we can see here, we have a higher low here. It makes a new high. But what happens here? We take it out. Yes, we get a bounce. But all this bounce puts in a higher low because it's lower than this low. Sorry, it's lower than this high. And what do we do here? We break the structure again. This time we break it with much more confirmation, much more volume, and much more time. Okay. And the reason why I'm using line chart right now is because I just want you to look at the structure. I don't want you to pay attention to candles or nothing like that. Okay. So now this would have been a tricky environment to trade because obviously we technically changed market structure on the lower time frame, but as we can see, we quickly buy it back up, and then we quickly reclaim this high. And even though we don't take it out aggressively, it is a sign of strength. And now at this point, we don't really know what the market's going to do. We want to see if we put in a higher low here, if we break this low again. Okay. But as we can see, we put in a higher low and then we took out this high. But once again, we didn't take it out with much conviction. And as soon as we took it out, we came back below it. So this is obviously a sign of weakness, but we will get into that later on. It's got nothing to do with market structure. So yes, you could have been looking at this as a higher low, and then for this to push up again. That's completely fine. I wouldn't say like this would have been taken an advanced trader to not long this based off of market structure. So yeah, let's just say you would have taken a loss here because you were caught offside, which is fine. It happens. And then as we can see, this fails and we take out structure yet again. So now we're back in the bearish structure because this low got taken out very aggressively as well. 1 second. And this is gonna be a long video, bro, because I'm gonna go over everything at once, and then I'm gonna go over into more details as well. Okay, so now we have a bearish structure, a lower high, a lower high, a lower high. Okay, so now this is a lower low from this high, so this becomes a significant high, and this creates a lower low from this high, so this becomes, so from this low, so this creates a lower low from this low, so this becomes a significant high as well. And now we put a new low, and now we put in another lower high. Okay, so structure is very, very, very important, because what is it doing? It's telling us where the overall trend is. If we understand where the overall trend is, and we're more likely to be right on a trade than wrong, because we understand the overall direction. It's very simple. I don't want to overcomplicate market structure to begin with. I just want you to use it as a tool to help you understand what is more probable. And the reason why this is factually more probable is because you're looking at the facts of the market, right? Lines and trend lines, levels, break and retest, these are all objective, but market structure is a lot less objective, because obviously you can kind of see what's higher, what's lower. All right, everyone can see this line is higher than this line, and everyone can see that this low is lower than this low, right? So this low is lower than this low. My bad. Okay, what I'm saying is it gives you some sort of factuality behind the market, which is kind of what we try to grasp for. Let's clean this shit up. Okay, so now we're continuing with the market structure. This doesn't mean any time it goes up we're shorting. It just means we're trying to understand what's more probable, right? If we understand what's more probable, we're obviously more likely to be on the right side of the market. And now we have a lower high here, and obviously we have this lower high, but as you can see, these highs are very, 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 very close to each other, and they're very internal. Okay, they're very internal, meaning they don't really hold as much significance. They don't stick out, right? They don't stick out like a giraffe's neck, bro. You get what I'm saying? They're very internal. It means like you can still respect them a little bit, but this will be the overall higher time frame high that we need to break. Because yeah, you can take these highs, but these highs didn't really mean much. Okay, if you can see that this high was the last high before we made a new low, which is down here really. Everything else was just internal, because this high didn't make a new low, and this high didn't. Actually, you can say this high made a new low. Anyways, what I'm trying to say is these highs are very internal. You get better at recognizing the good highs that actually respect or actually decide on when the trend is changing, and just internal highs that are likely to be taken out without anything happening. Okay, as we can see, we made another lower high here. I was probably a bit surprised that we didn't take the high just a little bit and then came back below it, because that's normally what it does. But another lower high, so this becomes a very, 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 very important high, because this high was the last high we made before we broke out of the range. As we can see, remember how we said market goes either down, up, or it goes in ranges, a range bound environment. This is a range bound environment because it's going sideways, as we can see, and this was the last high before we broke down. So now we're just literally continuing with the trend. Okay, a lower low here, which because it's lower than this low, a lower high, another lower low being starting here, and then it finishes down here, and then another lower low down here, lower high. As we can see, what happens here now? Okay, we come back down, we put in a lower high, we come down, we put in a lower low, but what happens here? As we put in this lower low, people quickly bought up the price of Bitcoin, and we quickly closed above this lower high very quickly. This is all within this is within a day, right? So within a day, we quickly got a lot of buying pressure. We went back above the previous lower low, as you can see here. We made a new high, because this was the last high. This is a higher high. Not only do we make a new high, but remember how I mentioned that you don't just want to see a shallow high and then a quick bounce back down. You want to see an aggressive push up, and you want to see some time being spent above the high. Okay, as we can see here, we put in a higher low. I don't know what the fuck's doing with my tools. My tools are tripping, bro. Anyways, we put in a higher low, bruh. Okay, we put in a higher low here. we push back up, we put in a higher high. So what I'm trying to say is at this point, because we did take a new low, but we quickly came back up and we reclaimed market structure. We spent time above the old high. We put in another higher high above the old high over here. And now we want to see if this low holds, because if this low holds, we can continue up. Okay, I don't even know if it holds. I'm literally observing in real time. So okay, breakout low, higher low, another higher low, break this up, get a higher high. Let's see what happens here. See, this is very tricky. This is very internal, but let's just include it as a higher low again. Higher high, higher low, higher high. And this is a very minimal break, but let's just say this is a break of structure. We put in a lower low than this one. We'll get into more details later on, because there's obviously more nuances to it, but we're doing it very basic, bro. Very basic, very basic for now. Lower high, because this high is lower than this high, right? And now obviously we start a new downtrend, and as we can see, this downtrend actually came back and it retested this level that we broke out of. This is another key thing we're going to learn later on. Anyways, let's ignore it for now. And as we can see here, I'm just going to not say anything for a sec. Where do you think we changed market structure for the upside? When which high was taken, did we change market structure? All right, it's obviously this high. Is very simple, because what we're seeing right now, we're seeing this high being put in. A new low was made below this low, but once again, we quickly got brought back up. We went above the previous low, and we took this high. And honestly, this right here, this is probably not enough for me personally to be like, okay, this is a shift in structure to the upside, just because we didn't take it rapidly and we didn't actually spend a lot of time above it. And as we can see, we didn't put in another higher low above it, right? So you'll get better at reading what type of internal structure is building. But as we can see here, we come back down and we still put in a higher low. So this is a low, higher low. Let's turn this green to not confuse you. So now this is a higher low, and as we can see here, this time we quickly take out this structure. And at this point, I'm thinking, okay, we just flipped market structure. As long as this low can hold, we're good. Higher low, or maybe it took it out very slightly. It doesn't matter. Taking it out very slightly is actually a good thing, even though it didn't take it out here. Now let's remove these. So now we're starting another bullish trend, and let's just respect the market structure yet again, okay? Until we see something that tells us it might be switching. As we can see here, we do have a higher low here, but this low is obviously very internal, so this might have been a difficult trade. Higher high, we came back down, we took this low, and now obviously remember what we mentioned that if it just takes it ever so slightly, like it did here, we want to see how price actually reacts. If it snaps up from it, it's not bearish, but because it took it, it retested it and it snapped down from it. Now we're like, okay, market structure shifting. So now we're in a bearish market yet again. There's a very up and down market this past, well, it's been like 2 years of backtesting. Okay, so now we got this lower low. So now we're looking for a lower high to be finalized here, somewhere here, before we take another leg down. As we can see, we did put the lower high here. That's where it finished, because we took out this high ever so slightly. But yeah, it doesn't matter, because you can still use this as the lower high, because this is the last high, right? So anything we do here doesn't really matter. As long as we don't reclaim this level, we're still bearish. Okay. What do we have here? Lower low, lower low, lower high, lower high. Okay. As we can see here, we have this lower high, and price did come back, it take out the low, but as we can see up here, we quickly re-snapped above from it, and we reclaimed it over here, right? Okay, and now obviously you're gonna say, well, that one failed because price went back down after. Well, that's the thing. It's not like market structure is like, it's not coded, right? It's not gonna work 100% of the time. And yeah, obviously the market can always shift, right? So at this point, for me, what I'm thinking is, as long as we hold above this high, we're bullish, right? And obviously we did not. We put in a higher low a higher low here. We pushed up higher high, but what happened here? Out of nowhere, this low was lost, as we can see, and we came back down into this range. We found acceptance in this range, and then we started a new downtrend, believe it or not. So this we call this a failed breakout, and this just basically means, yes, price did try to change structure, and you can say it changed structure on the lower time frame, but as you can see, these are the higher time frame. These are the higher time frame highs that are more important. Remember, we said the lower time frame is not as important. The higher time frame is more important. And obviously, it came back down, and it started a new bearish trend. All right, lower high, lower high, lower low, lower high, lower low, lower high. Then this high. Is it lower? Yeah, it's slightly lower. And now another lower low. This is very internal. I'm gonna when they're very small and internal, I'm gonna start ignoring them just because I don't want you to get stuck up on very internal price action. Lower high, lower low, lower high. As I said, this is the most important high because this high made a new low. As we can see, let's have a look here. What's the difference between? Actually, let's just make it easier for you, bro. What's the difference between this high here? Or even this high, doesn't matter. I don't know why my drawing tool's being weird, and this high here. Okay. This high did not make a new low, okay? Because price finished here. Whereas this high, it made a new low because price finished here. Once we started going down from this high, this is where price finished. Once we started going down from this high, this is where price finished. So this high is not significant. Yes, we take it out, but it's not significant. This high is much more significant to actually determine what type of structure we're in, okay? What type of market we're in. So as we can see here, we're putting a lower high, and this low at this point is still a higher low. So this probably gives you more signs that we're going to be in a range bound environment. So now, because this low, and this low did not make a new low, as we can see here. As we can see, this low did not make a new low, right? Because this is the lowest low. And this low did not make a new low. And now this high, sorry, my bad. I don't want to confuse you. This high did not make a new low, and this high did not make a new low in relative to the lowest low. These highs are not as important, okay? They're not as important. So now we have to look back, and which was the last high that made this lowest point in the market? Okay, it's this high here. All right, but let's just call it this high because this one's slightly higher. So these two highs were the last highs that made a new low point in the market. Okay, so in order for us to be bullish again, we need this level to be reclaimed. Doesn't matter what happens between these levels. It can take them, it can touch them, but we need this level to be reclaimed because that's the last high that made a lower low. Very important, very important. You're probably gonna have to start taking down notes on when because we're about to get into details, and it's stuff you're gonna have to go over maybe twice, 3 times, maybe we might have to watch this video 2 or 3 times, bro. Like, yeah, shit's about to get more detailed. And as we can see here, yes, we took out the high. We didn't find any acceptance above it. We did not find any acceptance above it. All right. We did not make any higher lows above it. We did not make any higher lows above it internally, right? We quickly took it and we came back down. So this is not a break of structure. This is a fake out, a liquidity sweep. We'll get into that later on. All right. So now because this high is slightly higher, I will start using this high now. And I want to see at this point, we want to see, okay, we just took out these highs. We didn't close above it. We came back down very bearishly. So now we're thinking, okay, let's see what happens. Let's see if we break this high again, then we're obviously bullish. If we fail to break this high, we're bearish. And as you can see here, we try to push up again. We failed to break the high. We have these higher lows being put in because this is a high, a higher low. And as we can see here, it fails. Okay. As we can see here, it fails. And obviously it takes it out once. We get a good reaction off of it. But unfortunately, that reaction only made a lower high. Okay, only made a lower high. and it came back and it took the low properly and it made a new low. So this now becomes the market structure pivot point, a very important high to reclaim. Whoa, that's a massive drop. I didn't even, okay. Whoa. Okay, now lower high, lower low, lower high. And as I said, remember how we said internal lows don't matter as much. We want to see significant lows. Repeat. Internal highs do not matter as much. We want to see significant highs that created new lows. Okay, as we can see, this high did not create a new low, so you can keep it there as a lower time frame market structure, but I wouldn't use it. And as we can see, this is the last low. Sorry, this is the last high that made a new low. So this becomes a very important structural point. And we make another lower high. So this high is lower than this high. What do? We come back down and look at this low. It does not get taken. Okay, this is now a higher low. Okay, so now we're thinking low, internal break. Let's just call it, I call it an internal break, even though it's not an external break. It's a lower time frame break. So that's, even though it's a sign of strength, it's not a confirmation yet. Okay, that's what I want to say. So as we can see here, this high breaks out above this high and this high. So we have a low, an internal higher high. Okay, so now we're wanting to see, are we going to make a higher low? Because if we make a higher low, chances are we're probably flipping bullish, right? Okay, and now obviously we make a higher low here. We mentioned it because it's not lower than this high. Sorry, it's not lower than this low. We don't take out the high, and then yet again we put in another higher low, and this time what do? We take it out. Okay, this time we take it out, and now this is where it gets interesting, because now you're probably thinking, okay, well, we took out this high, so we changed market structure, but as you can see here, this is a higher low, this is another higher low, and it fails to put in a higher high. So this low put in a higher high. Well, let's change it. Let's be very strict with it so you don't get confused. So at this point, we're thinking, okay, the market is bullish. We just broke out of these highs, and we put in 3 higher lows. Okay, so it's showing that people are more aggressive at the lows and they're willing to buy. So now you're probably thinking, okay, well, market structure just broke here, right? And yes, it did, because we put in a lower low, which is lower than this low. But to be completely honest, this low did not create a new high, so it doesn't have as much significance. Okay. But you're probably saying, okay, well, this low did make a new high and we took it out. Yes, you're right. This low did make a new high because that's the lowest point and that's the highest point, and that new high is higher than the old high. As we can see, this new high is lower than the old high. So this low is not as important. But now what happened is we took out this low, and yes, we took it out aggressively and we spent time below it, which is what we always want to see. But the thing is, we don't use market structure alone. We don't use daily levels alone. We don't use weekly levels alone. We don't use anything alone. We use all these things in confluence with each other to get a more probabilistic outcome. And what did we mention we have here? We mentioned here that we have a long range. As we can see, the market was ranging for how many? For 14th of June for 1 month, for one month and a few weeks. Okay, so this is the range. And if you watch in my auction market video, that's why I'm saying you might need to watch videos again. I mentioned that the longer that a range is, because this is a relatively long range, especially for Bitcoin, the more likely the breakout is going to be respected. The more likely the breakout is actually going to follow through, the longer that it is. Okay, that's just how markets work. And that's generally because there's a lot of volume that was transacted here. So when we do retest it, there's quite often a lot of demand. Anyway, so what I'm saying is, yes, we technically broke market structure on the lower time frame, but we only broke structure to retest this range. Okay, what we've done is we've retested this range breakout. So even though we did break structure, I would not have been shorting so aggressively because I understand the context. That's where the context comes in. And the context here is we just broke out of a higher time frame range. We've got higher lows on the higher time frame being put in. So now I'm waiting to see, as long as this low holds, I'm going to be bullish. and this low does hold, and now we continue up. So what I'm trying to say is, yes, we can get sometimes break of structures that don't lead to anything, but that is why we have to contextualize the market as a whole and not only look at one or two things and make a decision based off of those one or two things. Okay. Okay. I think this was a very long lesson. So now we're going to continue up. Okay. So we have a higher low, a higher low, a higher low, a higher low. Now we have this higher low creates a new high, as we can see here. So now this higher low also creates a new high. So this becomes a very, very important higher low now. This low becomes a very important higher low. Honestly, I would take this low, to be honest, because this low was the last low before we started the new local uptrend. And yes, I know technically this low made a higher low, but it doesn't really matter which ones you take. We still broke structure to the downside after. And I want to mention something here. As we can see in this uptrend, price is going up, but it's not breaking old highs with conviction, right? It's going up, but it's not breaking old highs aggressively, as we can see. So let's compare this up. Oh, my bad. Let's compare this uptrend. This uptrend. This is an uptrend because we're going highs. Let's compare it to this uptrend. As we can see, this uptrend is a lot more aggressive, and a lot more direct, right? Because we can see how aggressive it is. Whereas this uptrend is a little bit slower. So it's the first sign it might fail. Anyways, I don't want to complicate it. This is where we fail. And we take it out very aggressively. And as we can see, even if we're using this lower, higher low here, it still broke it, right? And now we're starting a new downtrend. So now we have a lower high, a lower low, a lower high, a lower low. Bam. Sorry, my bad. Okay. So now this is a very aggressive high that we put in, and it breaks the internal highs and it breaks the external highs. Okay, so this would have been the first sign of strength. But as we can see here, remember what I said? I always said that I want to see a break up with aggression, and I want to find some time acceptance above it. Time acceptance, meaning you want to spend a session or two above it. And you also want to make internal higher lows, okay? Internal higher lows, which we don't do here. If we were to make internal higher lows, it would have looked something like this. It would have gone up, higher low, higher high, higher low, higher high, higher low, higher high, right? What this signifies is that people are willing to participate at these levels. And this is done by looking at the time spent. Because if, let's just say you're having an auction, right? And you're spending 1 hour up. Let's say you're trying to buy fucking apples, right? And apples go to like $6, and you're spending, and they only go to $6 for like, they go to $6 for like 30 days, and people are happy to transact for 30 days at $6. This signifies that people are happy to transact for 30 days at $6 because we're getting time spent there, okay? But over here, apples went to $6, and no one was happy to transact at that price, and it quickly went back down, okay? So that's obviously very bearish, right? So just because we take a high on the chart, that doesn't automatically mean we're going to go long. It means we want to see how we react after we take the high to determine if people are actually accepting this price or if they're rejecting this price. That's why time is very important. So now, once again, as we can see here, you're probably seeing a pattern form, a completely different pattern forming. As we can see here, we take out this low, but we don't take it out very aggressively. Same theory up here to down here. Are people happy to sell down here, or is it quickly getting bought back up? It's obviously quickly getting bought back up below this low. It means people are not happy to sell any lower, and I think this creates the bottom, bro. Oh no, it doesn't. Okay. And then, oh, this is interesting, bro. This is very interesting because look, we have these highs being put in, And now you're probably thinking, well, yeah, this high broke up above these highs, so we just changed structure. Yes, we changed internal market structure on the lower time frame, but this is the last significant high that made a new low. So this high has to get reclaimed before we're bullish on the higher time frame. So this high would have had to do something like this, and then we're bullish, right? So I am not saying that you don't take longs until this high is reclaimed. It just means you don't be too bullish on the higher time frame until this high is reclaimed. Okay? Because if you do that, this is what happens. You get these massive moves against you, right? Because these moves are with the trend. These moves are against the trend. And yes, dude, it's not like I don't go long in these regions. If I get the setup, I still long. I just need to be aware of what's more likely going to happen on the higher time frame, because you don't want to get caught offside against the higher time frame. Okay, lower high, lower low. Once again, I know you're seeing a pattern right now, bro. And yes, this is the pattern that I trade. And we're seeing a low get taken, but it does not get acceptance below it. It quickly goes back up, right? You want to see it get taken, acceptance below it, maybe lower highs below it, spend some time below it, and then bam, more downside. So yes, this would have been a long that I took, but that's another story. So now we're looking at the last high that made a significant low, and it would be this one. You can technically use this one because this high made a new low down here. So this will be an internal shift. As we can see here, we broke above it, we retested it, but you do need to see this high get reclaimed if you want to see a higher time frame move above it. And once again, we're seeing the same pattern forming, bro. It goes slightly above it and it fails. People do not find acceptance above it. It goes up and quickly back down. Okay, it's like a reverse Nike tick, bro. So yeah, that's the difference between like a proper breakout and a failed breakout or a failed auction. A failed auction, it quickly snaps back below it. An actual breakout, you spend time and price above it. Okay, very important. Okay, so right now this is the last high. We want to see this high reclaimed. Okay, now this is very interesting, because let's just say we're looking at this, right? And we're saying, okay, we have a higher low here after so now look, we failed to break down below this low. That's the first sign of bullishness. We have a push up, and now we have an internal shift in structure because we took out these internal highs. We have a higher low here, another higher low, right? Another higher low. So yes, at this point right now, I would be looking for buys. And I don't know what's going to happen up here, but I would be looking for buys to take it up here, because the market structure has already showed me that it's making continuous higher lows and it wants to push higher, right? So yes, now it did push higher and failed, but that's not for me to determine if it's going to fail or not. That only happens once it goes there. Okay, so as we can see, we broke back down and we changed local market structure. But it's important to understand that at this point we're range bound. As you can see, we're forming a range, and market goes from range to trend, remember? So yes, even though we broke down and we started a bearish market structure because we broke down below this low, it's not like I'm quickly shorting it to new all-time lows, because I understand the context, right? The context is we're at 15k Bitcoin. We've been going down for like 2-3 years now, and we also failed to break down below the range low. So like, even though we might have changed market structure locally here, I probably wouldn't have been bearish at the time, just because I'm contextualizing the overall market. Okay, so anyways, let's just say these are the last higher high, and as we can see, we quickly break above it. We failed to make a new low from this high, so now we have a low, a high, a higher low. So now as soon as this high breaks, we're on. And as you can see, once this high breaks, we continue with the uptrend, and we finally break out this high, and we start a massive uptrend. Okay. Okay, so now another example of like, you don't always just look at market structure and use it on its own, is because yes, over here, we technically broke market structure to the downside. We have a low, a higher low, or another higher low, let's say, but we break that. But we have to look at the context that we just broke out of a massive range on the higher time frame. Okay, we just flipped structure on the higher time frame, and look how aggressive this buying is. So yes, even though I would have shorted, you still get short setups even if it fails, because it's not like you're shorting down here. it's important to understand the overall context of the market and not just look at structure on its own either, okay? You look at structure for confirmation and for understanding where the market's more likely to go. But yeah, as we can see here, we did take this low again and we quickly got bought back up. So obviously this range would have been a little bit tricky to trade. I'm not even going to lie to you. But what I'm saying is just because we broke structure on the lower time frame, remember how I said uptrends can have downtrends in them at the start? I said uptrends have downtrends in them. But if the higher time frame is clearly in an uptrend, as it is over here, this is the first time where we're clearly in an uptrend after all these years. You kind of, I wouldn't say ignore the lower time frame, but you want to pay more attention to the higher time frame, because eventually this will happen. Eventually this move will happen where you get a massive move and it blows all the lower time frame price action out the water, bro. Okay, and yeah, once again, like, okay, we take this higher low now, this is now the higher time frame. Obviously internally things can change, but now we're looking at the higher time frame because we're in a massive uptrend. Higher low, and we take this low, we do reclaim it very quickly, but as you can see here, we do actually stall out. It means we go upwards, but we don't go upwards aggressively, okay? This is always the first sign that a reversal is happening. Once the aggression slows down, as we can see, this is aggressive, this is aggressive, this is aggressive, this is aggressive, okay? But if you look here, where is it? If you look here, this is not very aggressive. This is more sideways upwards, right? Compared to this. So that's just signifying that we're not very aggressive. So you can kind of get more confidence to short it. Now, I want to highlight this range because remember how I told you at the start that we can use the lower time frame market structure to get a confirmation when we're going for a reversal. So let's say I had a reason for shorting this range, right? Let's say I wanted to short this range because I don't like the way it's going up, and I had multiple other reasons. But obviously I want to wait for market structure to shift at least on the lower time frame. I want to see a market structure shift at least on the lower time frame. And the reason for that is because I want a bit of confirmation that I'm moving within the trend at least on the lower time frame, okay? So this would be a lower time frame bearish trend in a higher time frame uptrend, okay? Very easy for you to spot out on the higher time frame. We can see we're in an uptrend. This is a bearish trend. So let's just say I wanted to short this region. I want to show you how we wait for confirmation. I'm only going to show you one example because I don't want to ruin your brain cells in one video. For now, I want you to just understand the market structure, identify higher time frame market structures, and also identify key market structure levels by looking at higher highs and higher lows, okay? So what I say by waiting for a lower time frame confirmation is, as we can see, this is the uptrend higher lows, right? If I wanted to short this region, I want to wait for a downward trend in structure, at least on the lower time frame. So now we're on the 4 hour, before we were on like the daily and the 12 hour. So now we're zooming in. Let's zoom in for one more hour. Fuck, where is it, bro? Okay, and now let's put the price candles on because we obviously need to see it. So now I have already recognized by looking at the 4 hour that this is the 4 hour last higher low. Let me remove these. So before I go short, I want to see a sign that this low is going to be lost, and obviously we lose it very aggressively over here. So this gives me some confirmation to go short, even though the higher time frame is still bullish, just because the lower time frame changed market structure, okay? And obviously we do get a massive push down, and then we change structure again. So yeah, we use market structure to identify the overall trend in the market. We use market structure to identify trend reversals in the market by finding the correct highs and lows. We use market structure to give us a bit of confirmation in the market a bit of confirmation in the market that the trend is reversing. So if I want to take a reversal trade against the time frame, I want to see a lower time frame shift. And obviously right now with Bitcoin, we're in a range. As we can see here, we're in a range. And yes, we did make we are making higher lows. Remember how I told you 2 days ago, I believe it was, that I don't want to see this low being lost. If we lose this low, we're bearish. I think that was that low, right? And as we can see here, we went up much more. But now we're starting a new downtrend. So I do think now if we lose this low, we're cooked and we're going to make new lows for the year. So this low becomes very important structurally. I want you to take notes of anytime I come up with something important, take notes of it. So for example, why we use market structure, how to identify market structure, the difference between an internal high and an internal low, for example. And also what you want to see to confirm a market structure has shifted, not just the price being above it. There's not automatically a shift, okay? And if you have to watch this video multiple times, you need to do so you can understand it fully. There's only we're only touching on like the basics of market structure. We're gonna get into more details, into a lot more things. But yeah, now you understand market structure, hopefully, and I understand how to mark up key levels. So just practice it and watch the video, and we'll go over it again soon. Alright, today we're going to be discussing market structure in more details, alright? And we're going to be going over a breakout versus fakeouts. We're going to go over the key characteristics that you see on the chart, typically when a breakout is occurring, as compared to when a fakeout is occurring, right? So the example I drew out on top is a breakout. And the example at the bottom is a fakeout. Now, as we can see on the breakout, price goes above a key structural point. And once it goes above the key structural point, there is no aggression to the downside. And it generally likes to stay above it or very close to it. And also we tend to see the internal structure, which is over here after a breakout, tends to also print a bullish structure with inside of it. As we can see here, we got a high, we got another higher high, and this just a little bit of a higher high as well. And we can see that even though we do make a lower low, sometimes we do make a lower low, we don't actually go much lower beyond it, and we quickly get bought back up, right? Now, in terms of a breakdown, a fake out, sorry, this would be what a typical fake out looks like. You quickly go above the structural point and you quickly come back below it with heavy selling. This signifies lack of acceptance at the key structural point. And then you tend to retest the key structural point with lower highs, okay? As we can see here, these are lower highs, as we can see, whereas these are not really lower highs. And the market structure key pivot point is still intact, and we're not getting any aggressive selling. We're not getting any aggressive selling at the key structural point, whereas over here we're getting a lot of aggression to the downside, which is obviously, generally speaking, the first sign that we're actually faking out and we're not going to break out, right? And obviously there are going to be times where you do get aggressive selling, but then you also get aggressive buybacks, and then you do actually break out. So nothing is perfect in trading. You do get a lot of randomness, but generally speaking, if I was to take a fake out trade, I wouldn't just take it as soon as it goes above it. I'd want to see how price reacts at this key level, right? That's why a lot of trading is just finding key levels and key structural points and watching how price is reacting at these key levels. Okay. But yeah, this is a very good example of price rejecting a breakout. And yeah, I tend to normally wait for attempts that failed, which gives me more confidence that we are gonna break down to the downside. Okay. So now I'm on the 12-hour chart on Bitcoin. And as we can see here, you can say that this is a key structural point because this was the last range we put in before we started the downtrend, right? And for me, this would have been the most important level to break before we this would have been the most important level for me to break before I would have had a bullish market structure, because then this would have been a high, a higher low, and then a higher high, and then I would have wanted to see this level hold and get a higher high up here before I would have been confident that we're gonna break up, right? Now, as we can see here, by the way, this is like the first example I've looked at, and there's many examples that we'll go over. But it doesn't take much cherry picking because price does respect market structure. It's the one thing that price respects on all assets. It's the most important thing in trading. Now, as we can see here, and when we do take these highs, price comes up, and then it does go sideways for a little bit. So up until this point, I would be bullish. But as we can see here, we do have one attempt to go up on the 12-hour, and then another attempt to go up, which is a lower attempt. And then we do eventually break down, right, with this candle. Now, I'm not saying I would have been short here. This would have been a very difficult short. And the better position would have been a long with a stop loss below this candle. Because if you did get the breakout, it would have been very rewarding, right? So it's not like I'm automatically going short. But what these key structural points give us is they give us an attempt to get in at a very good price with a very clear invalidation, because market structure is often respected. So things like these give us a clear entry points with very tight invalidation. That's why market structure is very good. But if this was the bullish case on Bitcoin, what you would have wanted to see was a push up, as we did push up here. And you would have wanted us to see this level hold first of all, because this is the internal structure. Remember how we mentioned the internal structure often gets respected as well? This structure should have been respected, right? So for me, if I was to go long, I know that if this structure gets disrespected, it means I'm most likely wrong. So anywhere next to this, I can go long and have a tight stop loss, right? And honestly, this would have been a trade I probably would have taken, and I obviously would have lost this trade because we did get invalidated. But look at the risk to reward, right? Because if we did break out, it would have continued much higher. So you do have a very good risk to reward. But yeah, what you would have wanted to see is this structure also get respected with this internal structure, and then you wanted us to continue pushing higher, internally making higher lows, right? All right, let's go over a few more examples. This is another example on Bitcoin. Even though this isn't really a very key high, because we do not make a new low over here, but we can just use this as the range high, right? As we can see, we're in a range. This is the low, this is the high, and as we can see, price takes the high. It does not even close above it, and it quickly closes below it. It then retests the high one more time, and it closes way below it again, right? So this would have been a very easy short, because we can see price is failing to close above the high, right? Let's go over more examples. As we can see once more here, this is a clear fake out because price does not close above the high, right? So this could have been a short back into the range. Now this is a very good example again, because what we see here is we see price does start to close above the range, but internally, right? Internally, this range over here, let me draw it properly, one second. All right. Internally, this range over here, we failed to make bullish market structure above the range high, above this yellow line's high, we failed to make bullish market structure, right? And as we can see again, we have attempts to go higher, which fail, right? So this would have been a nice signal that we're most likely gonna have a fake out. And once we start rejecting the key high to the downside on this candle, we can start entering shorts, because at that point we've also changed the local market structure, right? So what we're doing is we're using multiple time frames market structure to get entry points and to get a bias on the market, right? So once again, if we were to be bullish, this low would have had to hold, and we would have had to see a big push up and then internal higher lows being made, and then we could have been bullish, okay? And I'm not cherry picking bad examples right now. I'm just looking at any key range points, and we're seeing how price reacts to it. Okay, let's find some more examples. And yeah, this is obviously another example of a fake out. As we can see, we have the range high over here, and we failed to close above it, or put in local higher highs above it. And as you can see, we come back down and we start to put in lower highs, and lower highs, right? So just looking at market structure gives us an indication of where price is going to go, right? I'm trying to find an example of a breakout, but honestly, breakouts don't work as often as people think. It's mostly fake outs that make you the money, not breakouts. I'm trying to see something to the downside. So here is a clear example of a proper breakout. This is something that I would have gone long in, because as we can see here, this is the key pivot point, right? Even if it's just the range high, right? As we can see, this is the range high, this is the range low, right? Very simple to see. We're making just high, higher low, higher high. Yes, we do take the low, but we don't actually close below it or find any acceptance below it. So we're still within the range. And then we're putting in a high, higher low, higher high. Now remember, it's important to see how price reacts after a higher high is being put in, right? So this range outside the range high becomes very important. Just this range over here. This now becomes very important. And as we can see internally, we have an attempt to go back inside the range, which fails. It gets absorbed by the buyers. We then start to push up, and we start to form higher lows, which is what we want to see. Remember how we mentioned we want to see higher lows internally outside the key pivot point, right? Whether it's a range high, whether it's a key structural point, outside the key pivot points, we often want to see this type of formation forming, because this signifies that time and volume is occurring above the range high, which gives us more confidence that a breakout is about to happen, right? So once we see these types of formation where it's a very bullish range above the range high, we can have more confidence, right? But if price had gone up and came back down and did something like this, then obviously we have way less confidence of a breakout. Okay. Oh, it's not letting me go any further. Here's another example of a fake out. And as we can see, it was retested to the downside. There is often retest when price fakes out of a level. We do often get a retest. It is one of the setups that I take. But as we can see, there's a massive difference between this structural point and this structural point, right? Because this structural point broke up, retested the level, and continued to make higher lows, and then broke up once more. This level broke up, quickly came back down. This signifies failure, and this signifies unacceptance, right? It retested the key level, and it came back down, okay? And even just locally here, you did the same thing. you break out, you quickly you quickly come back below it, and you do not build higher highs and higher lows outside of it. If you look here at this point, from this high here, what do? We break out, and what do we do here? We start to build higher highs above it, right? Building higher highs above it signifies that there's acceptance above it, and price can now push higher. This is the type of things that I look for to get my bias, right? So me seeing this, I would have been bullish until we lost this level, right? Very simple. And then I would have used a lower time frame to help me find an entry, okay? But then if I saw this massive red candle, I would have said, okay, we tried to break out, we got a massive rejection, we retested it to the downside. Why should I be bullish? Before I'm bullish, I want to see us actually break up and build higher lows above it, right? So I'm just using market structure to determine how strong the trend is, and to determine whether we're going to break out or whether we're going to fake out, right? So let's continue and see key structural points. As we can see, we have a key structural point here, and we kind of want to see if price breaks above it and finds acceptance. Remember, breaking above it is not enough, because yes, for me, to be completely honest with you, this is a trade I would have taken, because we're building higher lows right below liquidity. So this signifies there's absorption here, and it's going to push higher. That's another lesson for another day. But just talking about breakouts and fakeouts, single-handedly, we are seeing price break up and quickly got rejected, right? As you can see, we failed to make bullish structure above it. So this signifies that it's most likely going to be a fake out, and we did fake out. We came back, we retested it. And by the way, this is a setup that I do take when I'm swing trading, even though I don't swing trade anymore. And it's just called a deviation level retest. So you find a level that price deviated from, which is this level here. This is the level, this is the deviation, this is the retest, right? And that's technically how head and shoulders form if you're a pattern trader. But we look at volume and actual price action to determine how valid it is, right? As we can see here, this one we don't get a retest. We can see here, we just change market structure. Let me delete everything else. Let's just say we broke out of this range, right? We change market structure. We got a breakout. And what do we see here? This is very important. Yes, we do come back down below it eventually, but you still could have made money. And this is only looking purely at breakouts and fakeouts. We're not looking at the overall trend, because obviously on hindsight, you're obviously retesting this key level, which is another thing I'm going to cover. So obviously you could have been more careful here to not get burned, but just looking purely at it from a lessons perspective, we do break out and we start to put higher lows above it, which is very important for us to see acceptance. But obviously we were retesting a very important higher time frame breakdown, very important higher time frame breakdown. So that's why it failed. But yeah, just looking at it from this lessons perspective, this was a very good example. And this is also a perfect example because now we have a key structural point here. And as we can see, we break it and we retest it with higher highs and higher lows. Remember, that's what we want to see when we look for acceptance and when we look for a trend continuation and things like that. We can see we're putting in higher lows, and when we're not actually getting any acceptance back below it, right? If we closed back below it with bearish candles and we retested it to the downside, that's bearish. But because we're above it, and as you can see, we're finding time acceptance, structural acceptance, and obviously over here volume comes in at the end to get a proper breakout. But this is a typical, like this is a picture perfect break and retest, because you clearly get bullish structural points above it and no bearish candles back inside the range, as we do over here and many other examples I showed you, right? And yeah, we went on a massive trend here. Okay, I think that's enough examples of a fake out versus actual breakout. And this is one more example of a fake out, right? You can see we broke above it. We got massive sell sequence. We tried to put in a high, which failed. We came back down below it. We retest it. We come back to the downside, right? So this is just purely looking at market structure, identifying key levels, and you got to understand that at this point, I don't know what's gonna happen. At this point, maybe I'll get in on the first retest, but if I'm just getting in purely based off of a retest, I need to protect myself very quickly. So once it starts moving my way, I'll put my stop loss at break even, right? But if we broke up and we started doing this, you know, then I would have gotten a bullish bias because this signifies acceptance. And obviously this signifies not acceptance. This signifies rejection, right? And you know, people would like to call it manipulation, accumulation, distribution, but it's literally just buyers and sellers deciding where price wants to go and how willing they are to participate, right? This is another example of this point here. As you can see, we break it to the upside and we quickly come back down below it. And anytime we break above it, we fail to build higher lows. We fail to do this. This would have been a difficult short, to be honest, but I would have had my bias from the overall trend, not from just this. But that's how we look at breakout versus fake outs, right? We want to see acceptance, and that's what I mean by acceptance above. We want to see bullish price action above the key level to help us determine our bias. And obviously the same goes to the downside, right? Let's find a few more examples. This is another example here. We can see this key range high. We go above it and we fail to build any sort of bullish structure above it. We reject it. We quickly come back to retest it. And yes, this is the setup I mentioned before. It's just a retest of a fake out level, right? This level was the fake out level. We fake out, we retest it. You can backtest this on the higher time frame. It works very well. If you're into like mechanical strategies, this does work very well. This is an example of probably a loss that I would have taken, to be honest. This would have been a long that I would have taken and I would have lost. Because we do have this key level here. We break above it, we come back down. We do not break structure. As we can see, this is the key internal low. This red one here. We break up and we kind of start to try to push up, but this candle would have probably caught me out. I probably would have went long, something like this, taking the breakout. I'm not a breakout trader, but this may be something I would have taken. And yeah, obviously I got stopped out, right, if I took it. But yeah, just showing you that you do, nothing's perfect and you do get stopped out. For me, this probably would have been a long, simply because I did like the bullish aggression here. I would have liked it, but obviously we did get stopped out if we had taken it. This is another example of a clear fake out. You have this key structural point right here. We don't even close above it at all. We don't even take it. But as you can see, you know, we reject it, we come back down and we retest it to the downside. This is the key level deviation retest strategy that I do take sometimes. Now the next thing I want to talk about is that a break of structure, it normally occurs, you normally get signs that structure is about to break before it actually breaks, right? And what I mean by this is that normally if you have a key level here, right, that's the range high, that's the range low, you normally get you normally get signs that a breakout is about to occur, and this normally happens once you get acceptance above the upper region of the range, right? So the value area high, we like to call it. Once you see price accepting above the upper region, and also failure to go below, failure to rotate below the midpoint is also a sign that a break is about to occur, right? So let's say let's actually put this into clear perspective, right? Right, so this is your range. You got the midpoint of the range, you got the high, you got the low, right? And generally speaking, this is how a range rotates. And obviously, with inside these highs and lows, you do get internal market structure, but we're just gonna keep it simple, right? So let's say we're breaking up to the upside. Generally speaking, before you get a breakout to the upside, you get a failed complete rotation. As we can see, we did not rotate to the downside. What does this show? This shows that buyers are a little bit more aggressive, right, than sellers, because they're willing to bid the price up here. And on top of that, you normally get acceptance at the high point of the range, something like this, right? And then you get a breakout, right? So as you can see, every single time we go up to the top of the range, we quickly sell off, we quickly sell off, we quickly sell off, we quickly sell off. We fail to rotate to the bottom of the range. It shows there's a little bit more absorption and acceptance, right? Not only that, we push up and we fail to rotate to even the midpoint of the range. And then we also build some sort of bullish structure here in terms of prices failing to actually rotate down, right? Before price fails to rotate down, sorry, after price fails to rotate down, you tend to get a push up. I want to show you an example of a short that I took on gold. This was a short position, but it's very simple, right? So first of all, this was the short that I took. It was over here. This was a few weeks ago, right? And what do we see here? We see this is the range, right? So we have, first of all, we have many signs that a breakdown is about to happen. The first sign that you see is you see a failed breakout to the other side. So a failed breakout to the upside. That's the first bearish sign. Let me draw it properly. Right, range high or market structure key point. It doesn't matter what you want to call it. We see a failed breakout to the upside. Okay. We see a rotation back down to the midpoint, rejection of the midpoint. And what do we see? It comes back down to the bottom of the range and we fail to rotate, right? So just like I showed you the bullish example here of us going sideways at the top of it, we are now going sideways at the bottom of it. This signifies that there's not much buying to rotate it back up. As we can see here, there's a lot of buying, it goes back up quickly, failure to respect the midpoint, and we're getting acceptance at the bottom of the range. This is a very bearish sign, because acceptance at the bottom of the range is the first thing that needs to occur before a breakdown happens, right? This is signifying that buyers and sellers were very happy with this price point, and they did not find value. Buyers did not find value within $5,000 for the first time since the start of the month, start of March. As we can see, they found value here, they bought it up quickly. They found value here, they bought it up quickly. They did not find value here, they did not buy it up, right? And obviously we're going to use other context, but looking at it purely at this, we're seeing that people are not finding value at the bottom of the range, and they're not buying it back up. As we can see, we spend from 16th of March, we spent 2 days at the bottom of the range, right? So buyers had 2 days to buy this, and no one wanted to buy it up. So this is the first sign. Sorry, this is the second sign. This is the first sign, a fake out. This is the second sign. They're gonna break down. And if you invert this is exactly what I just drew on my chart here on Bitcoin. You see this? It's this right here. So that's why price action and market structure are the most important thing to look at when getting a bias. Nothing else matters. Your gaps, your fair value gaps, and all these things don't matter. These are just things that we use to get entry points and to get stop loss areas. But if you want pure bias picking, you need to look at market structure and how price is reacting to the range, to the edges of the range, if that makes sense. Okay, this is like a picture perfect example, because you're getting you're spending time. Remember how we said that time is very important, because time signifies acceptance or rejection, right? Because spending 2 days at the bottom of the range and no one buying it up is a very clear sign that there's not much attention and there's not much interest, right? It's kind of like the auction market theory that we discussed. If you put something up on Facebook Marketplace, for example, for 6 days and no one messages you to buy it, you're most likely going to put a lower price, right? It's very simple. That's why people need to, once you understand auction market theory and you just treat price action like it's an auction between participants, it becomes much easier to kind of understand where price might be heading next. I know we're backtracking a little bit now, but this is a clear example of acceptance above the range, because what do we see? We see the key market structure point here, or the key range high here. We get a push up above it, we get a retest of it, and what do we see? We see time and price acceptance above it, right? We spent 3 days above it. We do not get a massive sell sequence like we saw before on Bitcoin. We saw massive sell sequences every time it got rejected. We saw sequences like this, right? We do not sell that. We do not see that, sorry. And we see higher lows being put in. So now for me, I would be bullish until we lose this level. It could have gone long, something like this, right? That's just like when you can go over yourself and find key structural points, key breakout points, whatever you want to call them, key range highs and range lows. And yeah, you can kind of see for yourself. You can see many examples of this. I'm not really cherry picking. That's just how price moves. And remember the first example, the first sign that we mentioned is that you get a failed breakdown. We do not get that here. We get a high, a higher low. You can call this an equal high, and then as we can see, we respect the midpoint, right? Respecting the midpoint is the first, or maybe I would say the second sign you would see after a failed breakdown. But obviously we don't get a failed breakdown here. But I just want to say, so you can see sorry, my bad. Well, I'm trying to get a fib level. And then obviously I would also use fib levels to get more confluence. But I want to mention that what we see here is we see an internal fake out. An internal fake out, as in this low, we faked out below it. So that's kind of getting more advanced, where we're using like internal structure and internal levels with external context. But yeah, this would have been the first sign that we're going to break out. And remember how we mentioned that we generally see acceptance at the top end of the range, as in we start to put higher lows at the top end of the range. That's normally what you first see. This would have been a difficult long, and to be completely honest with you, I might have went long here because we do start to put in higher lows at the top end of the range, but we do start to reject after. And that's where, like, looking at the context, right? Obviously, as you can see, we just had a massive sell sequence, so we do have to put that into perspective. And I do believe we're rejecting the 0.5 or the 0.6. Let me see, have a look. Yeah, so I wouldn't have gone long here just because the 0.6 and obviously the sell sequence. But just showing you an example of where I might have taken this long and I might have gotten burned. But that's why using the overall context is very, very, very important. But we'll get into that later on. Okay, so we discussed breakouts versus fakeouts, and also we discussed the signs that you see before a breakout occurs. And obviously this is another fakeout. Like, you get fakeouts everywhere on every chart. This is gold now, but this is another fakeout. And as we can see, we failed to build higher lows above it. We come back down and we retest it to the downside. This is probably like the best A plus setup is when you get a retest to the downside after a fake out, right? And obviously once you use the overall context, it'll become easier to get a bias. The reason why I don't take these trades as often anymore, because obviously I'm a day trader and a scalper now for the time being. So these trades do require you to be more of a swing trader, obviously. But yeah. So yeah, as we mentioned, the first sign that something is going to break down to the downside is getting this fake out from the top, rejecting the midpoint, and finding acceptance at the bottom, okay? And if you just invert it, it's all the same thing, right? Fake out to the downside, respecting the midpoint, and acceptance at the top of it. That's how we determine what price is going to do. It's very simple. That's basically auction market theory in a nutshell, right? And then everything else we use is just cherry on top. So looking at gold now, just quickly, I don't really have a clear bias on it. Is the live chart? Yeah. We're obviously in a downtrend, so I wouldn't be expecting a massive push up. We do have this daily level that just formed. We do have this key structural point over here. I am expecting us to be range bound, at least for today, because it's just the first day of the trading session. I would be expecting a push up, tap into this. If we get a sell sequence, a retest to the downside, and I can go short, right? So because I am expecting us to be range bound. So this would obviously be the range I'm playing. Now, if we come back up and we fail to break down and we get acceptance, I would go long for this daily at least, right? But I wouldn't be shooting for the star just because the overall context, right? That's why the overall context is very important. But yeah, even this daily long, it's very, very aggressive, very, very aggressive, and what you're not really getting more than a 1-to-1. So yeah, the gold is probably a no man's land right now. I do think this daily level retest would be a good short, because then we have, as you can see, we have this structural point. This is a very, very good example. Let me just remove the daily. So this is obviously a key structural point. We've already studied market structure before on the first episode. So now what happens here? We get a break above it. We retest it to the downside, and we try to break out, right? We try to break out. And that's another thing I forgot to touch on. I'm going to touch on it in a second. And we failed to break out of the local range that we put in above it. We failed to break out of it. So we get a fake out of the local range. We quickly come back down below it, right? This would have been very hard to go into a short because it quickly came back down below. But I think any retest of this level would be a good short, in my opinion. Yeah, what I wanted to mention is when we're trying to get a clear understanding of whether price is going to break up or down, typically what we want to see to get extra confirmation is we want to see the range that we put in at the top of the higher time frame range. Remember how price it forms ranges within ranges, right? Or it forms trends within trends. We want to see the high of this range outside the range high, the external range high. We want to see this high get taken, right? Generally speaking, if it's a fake out, this high will either get taken and quickly rejected, or it won't get taken at all, right? So we basically want to see this high get taken to confirm that we do have a proper breakout, right? As we can see on gold, the example I just showed. Let me see if I can come back to it. Honestly, I swear I low-key forgot it. Yeah, as we can see on gold, this high that we put in after breaking out, it gets taken, but it doesn't get any acceptance above it, right? So this would have been like if you're trying to go short and if I was expecting a higher time frame fake out, or we call it a deviation sometimes, this would have been the key point, right? And remember that price is fractal. So what you see on the higher time frame, what I explained to you on the higher time frame, it also happens on the lower time frame, right? So this for me is an entry. It's an entry trigger that I use when I see a fake out on the lower time frame. It's an entry trigger. I might use this on the 1 minute time frame, on the 15-second time frame. It doesn't really matter. But this is an example of an entry trigger that I use to get into a position at a very good point, because you always want to be entering on the edges. You don't want to be entering in the middle. But there was just another thing I wanted to mention, is that seeing how price reacts to the high of the first high that's put in after it breaks out is very important, right? So now I'm on the 4-hour chart, and this concept is a little bit tricky, but this concept is just called the point of break retest, right? Some people like to call it a breakup block. I think in ICT they call it a breakup block. But basically, when something breaks down and it breaks, basically you want to look at the key area where structure started to break down to the downside, right? So I just quickly eyeballed a very clean example. As we can see, this is the range low, you know, tap, tap, you know, almost tap, tap, whatever, tap, right? And we break down, and price typically likes to visit the last price sequence where price broke down. No, it likes to visit, sorry, the last price sequence that created the breakdown, right? So as we can see over here, we're clearly in a neutral range, and we would be bullish until this range breaks down, right? As we can see over here is where price broke down. So a point of break retest just basically means we're at the price point where price is retesting the area where a breakdown started, right? Where a new breakdown started. It's over here, as we can see. As we can see that this sequence over here is what created the breakdown, right? Very simple. This sequence, it created the breakdown. And price typically likes to come and retest the point of where it broke down, right? So this mini range gets retested over here, and this is typical, right? So now what you can do, right, if you want to go short, you know that your invalidation is if this point of break level gets reclaimed. So once you see a breakdown occur, the point of break is typically should not get reclaimed. It should not get reclaimed. If it is reclaimed, you're probably gonna continue pushing up. All right. As we can see here, we retest the bottom of the range where it broke down, and we continue on the downtrend. All right. And this goes on the lower time frame too. As we can see here, we started an uptrend, and this sequence here, it broke the uptrend, started the downtrend. Price likes to come and retest that pocket before continuing down. This happens on many time frames. I do like to use this on the lower time frame because it gives me a very good entry point. But yeah, it's just the point where price broke down, it likes to get retested. Let's find more examples. Okay, here's another example. As we can see, our price is in this range, you know, high, respected. And as we can see here, this price sequence created the downtrend over here. Because this price sequence created these candles that push down. And what does price do? Price comes back up. It retests it. And it comes back down, right? And then we eventually reclaim it. As you can see here, we reclaim this key pivot point, and we continue pushing up. As you can see, we never lose it again. Until probably later, obviously. And this is another example of a nice breakout. Because you get the retest and you build higher lows. I think I already went through this one. This is an example of a fake out. As we can see, price comes below and it quickly gets reclaimed, right? This is a very good entry point. We try to go lower, we quickly get absorbed and we get pushed back up, right? Let's find some more examples. Obviously, this is a fake out over here. But yeah, we already went over many of these. Let's look at gold now. Actually, let's look at NQ. I'll just go over the example of a trade that I took today. Actually, no, because it does involve new week opening gaps, and I don't wanna complicate things. But this is actually an example of NQ currently retesting the point of break. This is a very good example because it's happening live right now. Right, let's just remove everything for a second. And as we can see, this is the key low over here. And as we can see, this is the point of break, right? The point of break, because this is where price started to make a new downtrend over here, this region here. And as we can see, price came back up and it retested the point of break, which we call the point of break, because that's where the new downtrend started. And then we got some reaction to the downside, and now we're trying to retest it to the upside. That is why for me, if we can reclaim these levels here on NQ, I would be bullish, at least for momentarily, because then we reclaim the point of break, and we also, on top of that, we would have changed market structure, right? If we can reclaim these levels here. So this is a very important area for me. I'm going to see how price reacts during New York. So far we covered the point of break retest, we covered fakeouts versus breakouts, and we also covered what you want to see in order to get an early signal if whether price is going to break up or down, right? No, not up or down. If price wants to break up or if it wants to break down, you typically do get signs, and these signs is just how price reacts to the edges of the range, whether it's on the high or on the low.